What contributes to property tax increases? Let's start by explaining the factors related to town expenses and revenues. Factors that affect town expenses include inflation, increasing capital investment, and service level increases. Factors that affect town revenues include slow growth of a town's non-tax revenue and lagging non-residential assessment growth. Inflation for homeowners is the annual increase for typical consumer goods like groceries, clothing, and electronics. In contrast, inflation for the town is the annual increase for things like vehicles, equipment, or construction materials like asphalt, just to name a few. Since the town has a very different basket of goods than a typical household, the town's costs tend to experience a higher level of inflation than average consumer costs, especially in a strong economy. This results in increased expenses. With more people moving here, there's also an increasing need for more capital investments in infrastructure, and at a much faster rate, things like new roads and parks. The town sometimes borrows money to pay for these investments and must repay that debt back over time. And the town has increased the amount of property tax dollars spent to increase our level of service for maintaining our roads, sidewalks, and parks. Now, let's take a look at the town's revenues. In addition to property taxes, the town collects revenue to pay for expenses from a number of other sources. Revenues from some of these sources are increasing, but they're increasing at a much slower rate. They're not keeping pace with cost increases associated with a growing town. The mix of our revenue is also changing. For example, non-residential assessment growth is lagging behind overall town growth. Therefore, residential property owners are paying an increasing share of the property tax. Okay then, let's recap what contributes to property tax increases in our growing town. 1. The basket of goods the town pays for, labor, fuel, asphalt, utilities, etc., are increasing faster than the average inflation rate for typical consumers. 2. The town has increased expenses related to capital infrastructure, such as road replacement costs, to pay for major capital required for a growing town. 3. Offering increased service levels increases the amount the town needs to spend. 4. Other revenue sources are growing more slowly and are not keeping pace with cost increases, and this creates a gap in revenue. 5. Residential property owners are paying an increasing share of the property tax because non-residential assessment growth is lagging behind overall town growth.